Hey everyone, welcome back to the channel. If you've ever wanted to dive into the world of Forex trading, but had no idea where to start, you're in the right place. Today, we're going to take you from a total beginner to a confident pro. And yes, we're going to make it fun, easy to understand, and dare I say, even a little exciting. We'll break down what Forex is, how to trade, the strategies that the pros use, and some common mistakes to avoid. Plus, we'll sprinkle in some humor along the way because, well, why not? It's all about making this journey enjoyable and, of course, profitable. So grab a snack, get comfy, and let's dive in. Before we go any further, hit that like button and subscribe to the channel so you don't miss any of our future content. And if you're ready to become a Forex pro, share this video with your friends. Let's all level up together. All right, let's start with the basics. What is Forex? Well, Forex stands for foreign exchange, and it's the market where currencies are traded. The goal? You're buying one currency while selling another. Sounds simple enough, right? Picture this. You're in Paris, and you want to buy a croissant. You need euros, but your wallet only has dollars. So you go to the Forex market, trade your dollars for euros, and boom, you've got the currency you need. And hopefully, you get a really good croissant out of it. Now imagine doing this every day, but at a much larger scale. Forex trading is done 24 hours a day, 5 days a week, and it's the largest and most liquid market in the world. Trillions of dollars are traded every single day. So if you think it's just a niche market, think again. This is the big leagues. Don't worry, you don't need a passport for this trip. All you need is an internet connection and a brokerage account. Alright, so now you know what Forex is. But how does it actually work? The basic concept is simple. You're buying one currency and selling another. Here's a classic example. The EUR-USD pair. If you think the euro is going to get stronger against the dollar, you would buy the EUR-USD pair. If you think the dollar is going to get stronger, you'd sell it. Here's where it gets interesting. Forex trading happens in currency pairs. Think of it like a 2-for-1 deal. You'll always be trading two currencies against each other. For example, EUR-USD or GBP-JPY. The first currency is the base currency, and the second is the quote currency. It's like having two friends. One's the base, the star of the show, and the other's the quote, just there to make things interesting. And the exchange rate tells you how much of the quote currency you need to get 1 unit of the base currency. Think of it like ordering a double shot of espresso. The base currency is the espresso and the quote currency is the milk. You need both, but the base is what you're really after. Now let's talk about pips. No, not a bird that's trying to sell you something. A pip is the smallest price movement in a currency pair. It's usually the 4th decimal place. So if EUR-USD moves from 1.1000 to 1.1001 comma, that's 1 pip. Okay, now you know the basics. Time to roll up your sleeves and get your account set up. The first thing you need is a Forex broker. A broker is like your entry pass to the Forex market. They allow you to trade currencies, provide you with a platform, and give you access to tools like charts and analysis. Think of the broker as your Forex bouncer. They let you in, but you need to make sure you've got the right credentials, a deposit, some ID, and your game face on. When choosing a broker, look for the spreads they offer, which is the difference between the bid and ask price. A smaller spread is better for your profits. You'll also want to check if they're regulated. That's like making sure you're not gambling your money with someone who's just hanging out in their mom's basement. Once you've picked a broker and opened your account, you'll want to fund it with some money to trade. How much? Well, some brokers allow you to start with as little as $50, but don't just throw in a huge chunk of change right away. It's a good idea to start small and practice with a demo account before diving into live trades. Now let's talk about the two big strategies for making trades: technical analysis and fundamental analysis. The cool part? You get to choose which one works best for you, or you can combine them for a more powerful strategy. Let's start with technical analysis. This is all about reading charts and spotting patterns. Think of it like detective work, but instead of solving a crime, you're solving the mystery of the currency market's next move. You'll use things like support and resistance levels, candlestick patterns, and indicators like RSI or MACD to predict price movements. It's like predicting the weather, but instead of rain, you're predicting whether EUR-USD is going to go up or down. But don't get too confident. Sometimes even the best detectives miss the clues, and the market can still do whatever it wants. On the other hand, fundamental analysis looks at the economic factors that drive currency prices. Think GDP reports, interest rates, inflation, political events, basically everything that could affect the value of a currency. So, if you're the type who reads the newspaper every morning and loves to know what's going on in the world, then fundamental analysis might be for you. Okay, so now you know the basics, the strategies, and the tools. The next step is developing your own trading strategy. This is where the pros separate themselves from the amateurs. A strategy is your game plan, and like any successful plan, it needs to be clear and measurable. Remember, trading is like sports. You wouldn't just show up without a playbook. You need to have clear goals, and you need to stick to your rules. For example, how much are you willing to risk per trade? And how much profit are you targeting? Successful traders also use things like the risk-to-reward ratio, which helps you determine if a trade is worth the risk. Typically, you want a risk-to-reward ratio of 1:3. This means for every $1 you risk, you aim to make $3. Sounds good, right? Before we wrap up, let's talk about some common mistakes that rookie traders make so you can avoid them. First, over-leveraging. Leverage is like a double-edged sword. It can help you make bigger profits, but it can also magnify your losses. Don't get too cocky with it, start small. Second, don't trade based on emotions. Fear and greed are the enemies of successful traders. If you're nervous about a trade, it's probably a good sign to step back. And lastly, don't forget to keep learning. The markets are constantly changing, and staying informed is key to being a pro. So, there you have it, from beginner to pro in the world of Forex trading. It's all about understanding the basics, developing a strategy, and staying disciplined. If you can do that, you're well on your way to success in the currency markets. If you enjoyed this video, don't forget to like, subscribe, and share it with anyone you know who might be interested in learning how to trade Forex. The more we share, the more we all level up in our financial journeys. Let's crush it together. Thanks for watching, and good luck with your Forex trading journey. See you in the next video.